All right. Hi, everyone. It's Sid from Fundamental Research. And our guest today is Robert McAllister, the CEO of Enertopia Corp, a lithium junior in Nevada. They're coming out with the maiden resource estimate next year. And they recently sold another lithium project to Cypress Development. So they know what larger players are looking for. And that is a very critical skill set for juniors. Cypress is an advanced stage lithium junior in Nevada. And so the agenda for today is I'll kick off the call with our thoughts on lithium, and Robert will take over from there and talk to us about his project, upcoming plans, and I'm hoping to gain insights on what miners and battery manufacturers are looking for these days in juniors. For listeners, you can either wait till the end to ask questions, or if you have questions during the presentation, feel free to type them in and we'll try to respond to them. Here are some key disclaimers. Please take a moment. All right, so let's talk about lithium. Prices have doubled in the last year, and they're up 10x in the past 2 years, making it one of the best commodities, best performing commodities in the past year and 2 years. The chart here is the number one reason for the surge in prices. Global EV, electric vehicle sales, are more than doubled to 6 million vehicles last year, and this year is expected to hit 10 million, and consensus forecast is for sales to hit 30 million vehicles by the end of this decade. Now let's take a look at how lithium is used in a battery. A battery has three main components: the positive end, which is the cathode; the negative end is the anode; and the electrolyte. Lithium is and the lithium is used as the electrolyte, and it's used in all types of batteries. Versus the cathode and anodes can be substituted or replaced. Now, we estimate that this table here shows some of the key inputs of an EV battery. Lithium, being the electrolyte, is the key component. We estimate that approximately 50 kilograms of lithium carbonate is used in an EV. And as I mentioned earlier, by 2030, we are expecting, or the consensus estimate is 30 million vehicles. Applying 50 kilograms to 30 million vehicles, you're getting at 1.5 million tons of demand for lithium carbonate. Current demand is just 500,000. So we're expecting a 300% increase in demand for lithium over the next decade. And as you can see in this table here, among all the inputs, lithium is expected to see the highest growth in demand of almost 300%. Now, third-party sources, so it's not just us, third-party sources also say the same thing, indicating that demand is expected to rise from 500,000 to 2 million tons in the next 10 years. And as you can see from the chart at the bottom right, most of the demand is expected to come from EV or EV batteries. And in terms of demand versus supply, we are expecting a material supply deficits starting in 2025. Next year, this 2022, the market's supposed to be in a small deficit. The next year, it's supposed to be kind of even. Some sources indicate that it could be in a small deficit and some in small surplus. But anyway, we think that the next few years, it will be kind of break even, but material deficits will start showing up starting 2025. And our sectors saw several M&A transactions last year. And we believe large miners and battery manufacturers are constantly seeking attractive lithium junior projects for acquisition. The chart here shows the valuation multiples of lithium juniors just in Nevada. As you can see here, the average dollar per hectare, average enterprise value per hectare is almost $17,000 versus the global average of all lithium juniors is about $5,000. So which means that the market is paying a premium for projects in Nevada. And with that, and I guess the table also shows Enertopia here and how they fare versus others in the space. Enertopia is trading at 5,000 versus the area average is 17,000. And to explain why Enertopia is probably trading below peers and why there might be an opportunity for the market, I'm going to invite Robert McAllister, the CEO of Enertopia. Robert, I'm going to stop sharing. Please go ahead when you're ready.
Okay. Thanks, Sid. Always have to start with a pretty slide to get the presentation going. So this is a photo from our northern boundary of our project, looking north towards the TLC project, about a mile and a half away from us. So we're in good jurisdiction, paved highway, power lines. The town of Tonopah is only 6 miles away, very focused on mining. Historic mining center, was the biggest area for silver mining in the late 1880s, which made a lot of people a lot of money. And then that money got transformed into other industries, automotive industry, and it just kept getting recycled in the US. So it's come full circle now. We're back at it again in Tonopah. Disclaimer, we have forward-looking statements. You have to look at our press releases, our financials as we report them on a quarterly basis to get updated. So what I think we see now, we have the two biggest trends, what Enertopia believes are the two biggest trends for the next 2 decades at least, are the lithium-ion batteries transforming the way our world moves around. And Tesla's been the driver of this industry. And the new and upcoming thing is off-grid storage with large batteries that we see being another big benefit. And we have some technology that we'll share with you at the end of the presentation on what we're working on, where we think we'll have growth in that sector as well. What I want to first do is take a step back and show the lithium industry where the experts thought it would be almost a decade ago. And you could see in 2014, demand was less than 50,000 tons a year of lithium carbonate equivalent. And they expected by 2024, it would just get over 200,000 tons. Well, we're in 2022 and we're 3 times that number at over 600,000 tons this year. And then Albemarle, who's the largest producer in the world, lithium carbonate and hydroxide, total volume combined, they're very conservative, but you can see that their estimates from 2015 out to 2025 continue to go from lower left to upper right. And we've all seen charts in the past from other people in the mining sector that there's going to be a shortage. And those shortages never happen, but it's happening in lithium today. And we can see even with the COVID pandemic, that hasn't stopped the demand for lithium, as electric vehicles are outpacing what people thought they were going to be doing even 2 years ago. So if these demand patterns hold in place, the next big question going forward, which Canaccord Genuity put out this year, where is the lithium going to come from? And there's lots of lithium in the world. It's fairly abundant in a crustal point of view, but battery grade lithium, which is what you need for the battery plants to make the cells for the electric vehicles, that's a time consuming process. And it's also a time consuming process to build a mine. So you're looking at a minimum of 2 years if you're going to build the spodumene mine in certain jurisdictions of the world, up to 5 to 7 years. And on the lithium carbonate side, you're a minimum 3 years and probably 5 years to get into production. And that goes from, putting shovels in the ground, getting your resource, getting approvals, and then finally building the mine. The actual part of building the mine after you're financed is the quickest part of the whole process, but getting there is an effort. So as Sid mentioned, we sold our Claystone project that was sandwiched between Cypress and Noram and Clayton Valley. And then we picked up a much larger project just west of Tonopah. We did our first drill program in June this year, got our results out in August. And we've got 2 different Claystone horizons. The higher grade one is actually on the west side of the property. And we'll do a second drill program this year on coming up with a resource later on. This slide shows the 10 holes that were drilled. It's at near surface, easy to get to, and all the grades in the higher grade zone, the intercepts, there were sections that were over 1,000 ppm at near surface. Those numbers are actually fairly comparable to Clayton Valley. The thickness isn't as thick, but we can get, as an open pit scenario, easy to get to and pull it out of the ground.
Robert, if I may just stop you there for just 1 second. Do you mind showing the drill results there? Just for the audience, it might be better. They get an idea what are the grades, what do the grades look like in general in the area, and what does it mean if you say 1,000 ppm of lithium? Is that good or bad?
Okay, well, that's a great point, because I actually did a little note I made before the presentation that if you take 1,000 ppm of lithium, you put it in, since it's a claystone, you have to put it in solution. So you're looking at about 20%. You knock it down to about 200 ppm, because you have to have 20% rock, 80% water, so you can put it through the process. So then what you're left with, then once you recover that, then you, in a lithium chloride solution, then you add carbonate and you bring it back to a lithium carbonate. And when you do that, you end up with about 1,062 ppm, because we have to remember, one of the great things about lithium carbonate is your lithium in the ground gets multiplied, your final lithium product gets multiplied by 5.32, because you have to add that amount of carbonate to come up with lithium carbonate. So it ends up being out to a little over 1,000 ppm. So you basically come back to where you started, which works out to 2.2 pounds of lithium carbonate. So to have 1 ton, you'd need to move 1,000 tons of claystone at $2 to $3 a ton to move it. And then you have mining and processing costs. So to make 1,000 tons of lithium carbonate a year production, you need to mine about 2,900 tons per day of claystone. So that's like a 3,000 ton a day mill. And a lot of people are used to that for gold mining, where you have small productions. If you want to make, 20,000, 50,000 ounces a year, depending on the grade of the gold mine. So what's 1,000 tons of lithium carbonate equivalent battery grade worth today? $80,000 per ton. So that'd be $80 million in gross revenue to mine just 1,000 tons of lithium claystone battery grade today.
Perfect. Oh, thank you so much, Robert, for that.
So it's worth a lot of money. I mean, you look at the pre-feasibility studies, and they're looking anywhere from $10,000 to $20,000 if you're in production today. So your net profit is several 100%. There's not another mineral extracted today that's giving that kind of return.
I will talk about different types of lithium deposits later on, but then claystones, if you compare to another type called brine deposits, most of the brine deposits, their grades range from 200 to 700, 800. So when you are saying ppm lithium, so Enertopia has been getting grades, averaging grades about, as you can see here, from the 500 to 800 mark, which puts them in a higher grade category. Yeah,
and then then you add the brines, the chloride solution to put the rock into solution, and then you work it back from there. But in today's environment, actually even in last year's environment, these are very should be very economic. Of course, we have to go through feasibility studies and all that good stuff going forward, but we're at a good starting point in a good safe.
No, Robert, from one of the biggest difference that we see in the lithium, one of the better aspects is that unlike conventional, gold and copper exploration, lithium, it's much easier and faster to delineate a resource estimate for lithium. Fewer holes, fewer exploration dollars, you can get there faster than say gold or copper. You've done this before, and then you've sold a project to Cyprus. How long do you think you will, do you need to drill more to do a resource estimate, or when can you come up with a maiden resource estimate for this project?
Yeah, that's a good point you brought up, Sid. It doesn't take a lot of drilling to come up with a good resource, especially inferred resource, because the claystones are widely distributed. just the way they were deposited as a former lake bed. So they stretch over miles, and they're uniform, fairly uniform in thickness, unless there's been faulting going on. But the drill spacing for an inferred resource is 2,500 feet. So you can put, we did 10 holes and it cost us about $225,000. And we're looking to do probably another 10 holes in our second program in 2023. And we'll come up with a partial indicated and a larger inferred resource by only doing 20 holes and less than $500,000. And we know we've all seen some of these big copper gold stories, especially gold, where you have to drill, depending on the deposit, on 25-meter holes, and you're going down 1, 2, 3,000 meters. That's a lot of money just to drill a hole. Whereas we can come up with a good resource and get it, and then get the 43-101 out, and then move on to the next stage would be a pre-feasibility study.
That's one reason I think too. There's been a rush or Nevada Nevada lithium rush in the past little while. A lot of juniors just running into or getting attracted to Nevada. Most of the states remains underexplored for lithium. It's relatively new there, lithium exploration. So we have seen a lot of juniors enter the market there.
Yes, it's a great location. Easy to get to for the most part. There's been some good discoveries, a near surface one up to 4,000 ppm. When I saw the news, I bought stock. It's had a good run. And then there's other ones that are deeper down where they're hitting some good intercepts. And if you add up just the companies that have a resource, the Claystone resources in Nevada today, Nevada would rank number 3rd in the world for lithium resource. So I don't think people understand how big Nevada can be. And if you look at the companies that will start building a mine next year and should be in production by the end of the decade, Nevada could be producing 100,000 tons a year by 2030.
Got it. Now, Robert, I've started getting questions from our audience. I don't want to interrupt your presentation more. So do you want to go ahead and work on it, and then I'll start compiling these questions.
Okay, we'll do more speed dating here. So there's a picture of our green claystone near surface. I put the putty knife, the handle of the putty knife into it to show that it's easy to split apart, which is a good thing. There's what the property looks like. This is from our best drill hole location, number 10. This is looking east towards Tonopah in the background with an old caldera where all the old high-grade silver and gold was mined 100 years ago. And then you gave a reference to some of the Claystone projects. You got American Lithium, TLC, as I mentioned, they're just north of us. This is in situ per ton lithium Claystone value. Lithium America, so hopefully be building a mine. Only start that a year or two from now, or a month or two from now, and should be in production in 2024. So that'll be the big thing. And that's something we haven't talked about, Sid, real quickly, is the disconnect between the valuations of lithium claystones. And that's simple. There's no producing lithium claystone mine in the world today. Thacker Pass would be the first one. And, Cyprus has shown that they can do the process in their pilot plant, where they came up with 99.97% battery grade, which is first tier, second to none in the world. So we know that the process works. Now we have to do it at scale. And that's what the market will be waiting for. And when that happens, you'll have some big capital appreciations in the claystones. So for Enertopia, on the claystone side, we're planning with BLM for our drill program. Hope to have news out on that early in the new year. And then we'll follow that up once we drill with a 43-101 resource. We're also taking quotes for third-party direct lithium exchange for processing to get some ideas and running some tests. And the big thing is the U.S. Inflation Reduction Act, where as a U.S. company, once we had a feasibility study completed, we would be in line to apply for loans or grants to actually build the mine. So that wasn't possible before we sold our project at Clayton Valley, but it is possible now with the big Inflation Reduction Act in the US, and that's a big thing. And now we'll segue into the other big thing is how much solar is being built around the world and what we think we could do if you start retrofitting for a longer life. And there's things you can do to reduce heat stress on solar panels, capture water at nighttime as a process. These are things we've been working on. And this slide here is showing the off-grid battery storage that's coming as we move forward, which is a huge market for off-grid batteries, battery management systems. That's something we're working on. And this year we've completed 4 non-provisional patents, and we should start hearing back from the US Patent Office as soon as possibly May 2023, running through the end of next year on what our patents can do on the clean energy side. And we're working on prototypes right now. It's always, with COVID, things have taken longer. I don't want to use it as an excuse, but good grief, it is the truth how it's disrupted manufacturing and being able to buy stuff and getting things manufactured. But we're moving forward one day at a time. And here's the Inflation Reduction Act. It's $394 billion from Uncle Sam, and $122 billion of that is for loans and grants. And then the consumers, there's $43 billion for incentives for off-grid solar battery management. And we think we can attract that with our battery management system down the road. I'm the president, CEO, director. Alan Spissinger is our CFO. And then Kevin Brown, John Nelson are our 2 other directors. John Thomas is a technical advisor on the technical side of mining. Rodney Blake, financial consultant, worked for Canaccord Genuity for 32 years. And our clean energy consultants who are helping us with all the patents that we've been working on and our prototypes. And our share structure, 155 million shares, 4.9 million warrants at 4 cents US that expire in March 2023, and 9.1 million options, various prices anywhere from 4 cents to 22 cents per share, which would take us to a fully diluted just over 169 million shares. And we have 3 million shares of Cypress Development Corp that we received when we concluded the sale of our Clayton Valley project. And now I can take questions.
Perfect. Thank you so much, Robert. So yeah, listeners, if you have any questions, please type them in. I can take one by one. Maybe I can just start going ahead. Start asking questions I received so far. How long for an environmental assessment?
Environmental assessment, it depends on the size of the project and if there's been any historic work recently done. So we're lucky because TLC, which is only 1.5 miles north of us, they've been going through that process for over a year now. So normally to go through the full permitting environmental assessment, can be anywhere. I don't know if you can get it done in under a year. That's pretty hard to do, but more likely 2 to 3 years. And you can do that concurrently, once we come up with our 43-101 resource and we can start that process. So usually companies have a lot of things going at the same time, but that's a general guideline. So far, there hasn't been any showstoppers anywhere. No endangered species, nothing like that. No historic civilizations, no artifacts. Those have been looked for by several companies in the past. Nothing's been found. The only thing that's historic is the mining in the 1880s, to the early 1900s. Because now anything that's over 50 years is considered an artifact. So if somebody had this is an interesting one for you. If somebody had a campsite and left some tin cans from 50 years ago, you're not supposed to remove those. Those are now considered artifacts.
Now, the second question is, do you have to raise capital, or can you divest the 3 million shares you own of Cypress to raise capital if needed?
That's a good question. And unfortunately, right now, we don't have to raise capital for what we have planned for 2023. We're well funded. We have $400,000 US in our bank account, and we've got it covered off, and we can start divesting Cypress shares at any time as needed. Of course, we'd like to see their price far higher than where it is today before we would want to divest in a meaningful way.
Got it. This is a question for me, actually. I think it will be very useful for our audience. You talked about spodumene, Claystone, there's brine. In layman's language, are you able to communicate what's the difference among these different types of projects or deposits, and what are the pros and cons of Claystone? Now, just to give a heads up, as Robert mentioned before, Claystone is relatively new. There's there's no known commercial production of Claystone, so it's a brand new thing in the sector. Yeah, Robert, go ahead. Sorry.
Yeah, no, that's a great question. I think the market's giving us a great opportunity, because right now most people are scared to be investors on a long-term basis. Some are scared to be an investor on a daily basis, but now is a good opportunity. So I'll go over quickly. So historically, brines were most of the production, Argentina, Chile, and then they would, those operations would take it to either industrial grade 99%, or they would bring it up to 99.5% battery grade. And there was some smaller spodumene producers in Argentina. Has been historically the biggest place for spodumene. There's other countries coming on now. Brazil's making a big push. Probably most of our viewers have heard of SGML, and all full disclosure, I've bought shares in the open market, and I like that story a lot. So, and that'll segue into the pricing, because there's different pricing scenarios for the product. So lithium carbonate, which gets quoted frequently, as battery grade out of China, is just over $80,000 a ton US today. Hydroxide, battery grade lithium hydroxide is anywhere from 65 to 75 in China today. So lithium carbonate is actually priced higher. A few years ago, everybody thought lithium carbonate was going to be the orphan and hydroxide would be the winner. But because of the battery technology and the demand from China for lithium iron phosphate batteries, it's actually flipped, and there's more of a demand for carbonate than hydroxide. And carbonate, you can either produce both. You can convert it. You can take your lithium carbonate and you can either upgrade it to battery grade carbonate, or you can convert it to battery grade lithium hydroxide. So you can do both with that one. But with spodumene, you're mostly restricted to making the hydroxide. And the benefit near term is clearly in the spodumene camp, because of the big shortage and the rapid price increase in lithium pricing. The spodumene spot market is anywhere from $5,500 to $6,500 a ton, and you only have to convert that from your rock, which is 1.2, maybe 1.75%, and you convert it up to 5.5 to 6%. And to produce that today is roughly, the best possible mines probably $500 per ton cost, and the higher cost mines are probably $1,000, $1,200. So if you can sell it for 5 or 6, and you're producing it for 1, you're making 400% profit. Again, there's nothing else like it in the industry. And so that's why SGML has had such a rapid appreciation in price, because they're going to be a producer here in the next couple months. And then they're going to double their production again in 2024. So they're going to capture this high value market. And I'll segue one more. I think what they need to do, and they've talked about it, where they'll actually, the next thing for them to do, build their own refining capacity to take that 6% concentrate and turn it into battery grade. Then they would capture the full value. And I don't know how long it'll last. I think they're going to get bought out at some point, because it's an amazing story. And there's some other companies in the area that people should look at, I think. But so I think right now what's happened is, because of the price of lithium, the paradox is the price of lithium's gone up so much, and it's so easy now for hydroxide developers to become producers, that it's been a negative for the lithium carbonate claystone people that want to be producers going forward. But the upside is there's not enough converting capacity, and that goes across the board. And there's not enough mines being developed to reach the longer term production needs of the industry. So carbonates are going to have a big rally here. Don't know when, but we will see that, just because the valuations of the in situ resource in the ground, we've never seen that before. And the world's trying to grapple with what's going on and how we're changing the our transportation infrastructure, and also our electrification of our infrastructure with wind and solar and battery backup. We're getting these two mega transformations in our societies overnight in two sectors at the same time. So it's just an amazing time right now to take a look at where you want to be in these two spots, from my point of view anyways.
Okay, thank you so much, Robert, for that. I got a bunch of questions on Albemarle, consolidation, M&A potential in the area. I think I'm going to combine all these and frame into one. Maybe this question has the right word, right language. Do you expect Clayton Valley to ultimately become one mine, one operator? So all contiguous properties amalgamation. They also mentioned Albemarle. So I think the gist of this is, what are your thoughts on potentially having all these juniors under one roof? And is that a possibility even?
I would have thought that was a very high probability a year ago. With this Inflation Reduction Act, it does open the door. I mean, and I can speak specifically to the area of Cyprus, where the project we had in NORAM, because like I mentioned before, these claystone deposits go for several miles in all directions. And so we lucked out that there was a chunk of open ground, and we were able to come up with a resource very quickly. And it happened that the high grade zone went right through our property. But you could say that simplistically, yes, it would be nice if it was all consolidated into one project, and that, if it was a big company, they would want to have that. So, if let's say Albemarle wanted to have the whole Claystone thing, they'd probably go nudge, nudge, wink, wink. Hey, hey, ABC company, why don't you consolidate it all? And then by the way, make sure your technology works, and then we'll come in and buy you out, because it doesn't matter if your valuation today is, it's $150 million for Cyprus, 60 to 70 million for NORAM. So if you round it all off, let's call it $200 million, give or take. Well, Albemarle's $240, $50 a share. So all they have to do would be to issue 1 million shares. That's like, it's an accounting error for them to buy out that whole deposit. And so if they wanted to pay 2 times for the technology to be proven up, the resource to be consolidated, it wouldn't matter if it cost them 500 million or so. It's a rounding error to them on issuing stock.
Okay, now I assume.
Now the interesting part though is what's going on in the sector. We're seeing a big push because automotive companies, battery manufacturers, they're understanding and realizing that this isn't like, oh, we just go out, there's going to be enough copper, there's going to be enough computer chips, yada, yada, to build our product. Now they realize that, hey, wait a minute, we don't know if we can have batteries. We don't know if there's enough lithium that can become battery grade lithium so we can have batteries, because we don't want to be building cars that are going to cost $20,000 to $100,000 a piece, and we produce 1 million of them, but we don't have a battery for them. So they're moving, they're moving downstream, and they're going, hey, we need to take interest in these things now. So you could see that where battery manufacturers, hey, they're spending billions to build these plants, but if you look at all the plants that are going to get, that have been proposed and money's being raised for, they would only be at 50% capacity. And the worst thing you can do is run a plant at 50% capacity and think you're going to make money. So it wouldn't surprise me that in the next couple of years, you're going to see a huge scramble in capital, because there has to be $45 billion put in the industry to meet the growth rate, just the current growth rate, let alone if things were to accelerate at all. If there's a climate scare in the world, which I think is actually a blue sky event for the sector. But I do think, and then, ESG is real. We're going to have to start reporting ESG in 2024 as a small reporting company under the US guidelines. So all these things are evolving and coming into form that are going to have major impacts in the sector, I think, in very positive ways. And while all this is going on, people are concerned about what they want to buy or invest in. So like I said, this is an unbelievable time for people to go through, do their due diligence. Historically, we're running into the peak period of tax loss selling. The last, the second week, the third week of December has been a great time to look for stuff. So, I'm looking at adding to my Albemarle. I'm looking to adding to SGML. So, I don't know. I'm pretty excited.
Got to give a disclaimer there to everyone there. So we're not suggesting that you go out and buy all these shares.
Absolutely.
Just giving you ideas. So you do your own research. These are we're just sharing Robert's personal investments. We'll just take 2 more questions. I have some questions regarding timelines, upcoming catalysts. Again, I'm going to try to put everything in one. Maybe when can investors expect your maiden resource, and will you go ahead and do an updated resource or a PEA? And if so, what's the timeline for a PEA?
Yeah, I think the way we're looking at, good questions. The way we're looking at it now is, first submit our drill program to the BLM, and they review it and then say, okay, or no, you have to modify it this way. And that's, they've been pretty busy. It's slow right now. So we'll get that submitted. I'm expecting early in the new year. So we'd hear back from them February, March. And then once we're approved, then we look for bids to go out. And we locked out last year because their Cypress had a driller and they were just finishing off a program and they had a vacancy, so we were able to get in there and get the program drilled, or else we wouldn't have had it drilled till probably about this time of the year. So it's a very busy season. It's going to get busier next year, I'm sure, because of the discoveries that have been made in Nevada. And as I mentioned again, the Inflation Reduction Act and how that benefits things going forward. But then, once we get our results, then it's getting a QP that's qualified for lithium resource definition. Getting that report, that'll take a few months after we submit, get that, get the results back, get it to the QP, then we'll get the report back. So I would say it's probably going to be, I'd say the fall, to be honest, for a 43-101. But then once you have that, I think we could move forward potentially with the feasibility, especially if we get some solid information on third parties with the DLE that we're reviewing right now. Because there's the steps for the pre-feasibility is to have your resource, outlined. Most people like indicated or a measured resource to come up with a pre-feasibility, but we know that looking at Claystones, once, if we have an indicated resource, it doesn't change very much, maybe 5 to 10 ppm, which is, it's a rounding error on your evaluation. So we're not concerned about that. Again, like you mentioned earlier, it's far easier to come up with a resource study on the lithium claystone side than if you're following a high grade gold vein that pinches and swells and disappears and you don't know what's going on. So yeah, geology is our friend in this situation.
So mid 2023, a maiden resource and a PEA maybe in the first half of 2024. Is that a fair?
Yeah, PEA, well, they're taking longer. I mean, now Cyprus is doing, so here's a good study in timeline. Cyprus is doing a bankable feasibility, and they originally had hoped it would have been out this time of year, and it's looking like it's going to be Q2 next year.
Okay, got it.
So I think TLC are working on an updated feasibility study, and it's not a bankable. So that's probably a good metric to go by, how long these things are
NORAM
taking.
is also working on a PFS, which is expected to come out. Yeah, I think so. We have a bunch of questions too, but because of time limitations, we have a request from one individual saying, where can we access this deck presentation? If you can email us at info@researchfrc.com. Or Robert, is this up on your website or?
We don't know. This deck isn't on our website. We have
okay, so yeah, so
presentations
anyone
on our
here,
website.
just please email me at info@researchfrc.com. I can send you a copy of this deck, no problem. And I think that's what we have. That's the time we have for today. Robert, any closing thoughts, final comments?
Oh boy, closing thoughts. I'll talk for hours. I just, thank you.
Let's do it.
Thank
20
you
seconds.
for the time to present. I've been in the sector since 2016, and I've seen all the questions and the doubts all along the way about what was going to happen, and nothing's changed. It's only gone stronger from what I can see. Just the numbers speak for themselves on the supply demand curve and what's going on. So I'm as bullish now as I ever have been, and I've seen a lot of things cross the line here, and I don't know where else you'd want to be in the mineral environment today. I really don't.
Perfect. Thank you so much, Robert. So we've been covering Enertopia even before they sold their first project to Cyprus. So if you have not seen our reports, make sure you check that out. It's researchfrc.com and search for the company name Enertopia Corp. And you can see all of the reports and notes we've done on the company in the past. And again, thank you so much, Robert, and everyone on the call for taking time today. A recording will be uploaded on our YouTube channel shortly. Please ensure you subscribe to the channel and also sign up to be a member of our platform. As I mentioned, researchfrc.com. You get alerts when we publish new reports. And of course, you'll be able to see a list of top picks. Again, thank you so much and wish you all the best and stay safe.
Thank you, Sid.
Thank you, Robert.